All right, good morning and welcome everyone to session 6 of our Get Ahead course. I am Sandrine Pamal speaking to you from Mauritius, looking forward to have a fruitful session with you all today. We will be covering and going through auditing journals, related parties, and other income in Audit International. We'll really be touching base on the principles which are quite similar to the rest of the session that we've been having so far into this series. As mentioned, I will be going through journal entries because this is in every single section that you audit. There are references to the relevant audit document that you should use to address journal entries testing in the relevant work programs. So we'll be going into that, into guiding you where to find these in the course today. We will also discuss how you will get to what the related party disclosures are, and then we will touch on other income. As per usual, all the attendees are currently muted, and you can use the chat or question function to ask any questions or even interact with us. If the signal is lost, please try to exit and try to come back into the webinar, or maybe use the app rather than the browser. The recording will be made available in the next week or two for this session. So if you're missing anything, if you get lost, or maybe you're a bit overwhelmed, or maybe something is going really too fast, or maybe you just want to rehash anything, you can make use of the recording to get a little bit of a refresher. Just be a little bit patient. Our marketing team will make the needful to share it with you. If you're confused around where to find the chat function, it's on my side, it's on the right-hand side of my screen. You'll see a question panel where there is the question/chat box. You can click on that, open that up. There's a little blog to enter a question. You can, type in your question if you have any or any of your comments. I'll do my best. We'll try our best to catch up all the questions as we're presenting. Alternatively, when we're done with the presentation, the webinar, we'll make sure to come back to you. Before we go ahead with the presentation itself, I'd like us to do a little poll just to make sure that you have the course material downloaded. So please do let me know whether you have today's course material already downloaded. So I see it's mostly yes. If not yet, we have already posted the link to the course material in the chat box. So please, if you haven't yet downloaded it, please open up the chat box and click on the little link. In the folder that I have shared with you, you have the supporting documents folder as well as wrap-up manufacturing engagement file. So you can make use of this engagement file because we have included everything for you. Okay, 10 more seconds for the poll. We've got more than 50% of you guys who've answered the poll. And I see that most of you don't have the course material downloaded yet. So please do the needful from the chat box. It's already posted there. All right, moving now to the next poll. I'm going to close that one. Moving to the next one, I'd like to know more about who is in the room. Second poll is whether you have attended the Audit International previous webinars in this Get Ahead series. So we just want to know if it's your first one or is it the second one. You've attended all. Guys, I'm so happy to see we've got 80% who have attended to all. Some of you 3+. Okay, there's a bit of you whose first session is today. So please make sure if it's your first session today to download the course material. 15 more seconds for the poll. I'm also buying a bit of time so that you can download the course material. So please free to do that. 5 more seconds for the poll. Wow, 63%, 65% of all of us have attended all the courses. How amazing is that? All right, guys, thank you for playing the game. I'm going to close the poll now and move to my slide. We are still going to be working with wrap-up manufacturing. Okay, I'm going to go through the slide now. We've got a series of slides to present to you that will give you time to download all your course materials, okay? So we're still working with wrap-up manufacturing with the same financial year end 30th of April 2023. The accounting framework is going to be for some of your IFRS for SMEs because this is the template that your firm has paid for. Some of you will have the full IFRS. As the team says, Andy Craig has not yet been fired. He's the accountant. He's sitting in the room listening to us. So yeah, that's a bit about who is our client, just to give you an introduction if it is your first session. Now we're going to jump right into journal entries. Again, we are just going to cover what the process is just to lay the foundation and to put you in the right frame of mind about what we're going to be covering. So I've got a very nice slide. So remember, if you have attended all our sessions, you must be familiar with that slide, which is the process flow. Where do the financial statements come from? If you look from the bottom right-hand side of my screen, they come from the trial balance and other information, such as loan terms, etc. The trial balance then comes from the general ledger. Journals will be things that go into or are passed into the general ledger. And journals usually also still come from some sort of source documentation or even an action that has been taken. There will be a reason for journals to be processed. If we have a journal and there's no reason for somebody to process it, and someone just came up with it and decided we're going to pass a journal, then we have some concerns about journals like this. But usually what will happen, there will be some sort of action taken, some sort of document, source document, or something which justifies that the accountant has processed a journal entry. So just to give you an example of an action taken, let's say we have hired an employee, and in terms of legislation, we're required in South Africa, for example, to give annual leave of at least 15 days. So that leave accrues as the person is working. So the accountant will then raise a provision for leave pay, so that will be, the action that gave rise to a journal will be the hiring of an employee. Now, looking at just skipping now the process flow and back to our usual three-pointed slide, the financial reporting framework, even with journals, just to keep in mind, journals will be passed actually to comply with something in the accounting framework. So in that example for provision for leave pay that was just discussed, it assumes there's a section on employee benefit, and legislation says, okay, you have to provide for accrual accounts for short-term employee benefits. Therefore, that's why we landed up passing the journal. So the accounting framework says, here's the rule, here's the criteria, then the client passes the journal entry on their financial statements, which then means they comply with the requirements of the accounting framework. I've been saying the client passes or repasses the journal entry, but technically it's really your client who will be processing the journal entries in their financial statements. Sometimes you will get journals from your client, or maybe yourself, you will be proposing journals to the clients based on your testing that you've done. And then most of you will be using Caseware working paper to persist those journal entries, right? If you recall the journal entries capabilities. So when you audit, when we audit, we again focus on the principle remain the same for journal entries. We're still going to audit in accordance with what the framework tells us, what we should be doing in the financial statements. So what is in the financial statements, and is it all tied up correctly? Can we get sufficient appropriate audit evidence to issue our opinion on the financial statements? Yes or no? So why a focus on the journal entry? So if you refer to your ISA 240, so you can also write that down and make sure that you do yourself a favor, bedtime reading, you go and read through your ISA 240. The standard deals with which deals with fraud. So there's a specific section which deals with the risk about management override of controls. So that little extract of my screen on this slide is from the standard, and it's the heading with the heading audit procedures responsive to risks related to management override of control. In ISA 240 specifically, this is the risk that has been referred to. It is one of the 3 presumed significant risks in auditing standard. And we always talk about the law of 3s when we talk about the presumed significant risks, because there are 3 presumed significant risks. And then also within this particular risk, management override of controls, there are 3 elements to it. There is one part being journal entries, which we will cover today, just now. And the second part of the risk is dealing with estimates and management bias in estimates. And the third part of the risk is transactions, significant transactions outside of the ordinary course of the business. Guys, today we are not going to cover the estimates and significant transactions out of the ordinary course of the business. Our focus is on journal entries. That is because this is what you're going to come across most often in most of your audits. The others you might come across, but again, that is going to be in very specific set of circumstances. All right, so on the screen, paragraph 32 in the standard talks about management being in a unique position to perpetrate fraud because management is able to manipulate accounting records, prepare fraudulent financial statements by overriding controls. Why? Because that is their position in the business. They are able to tell to an employee, okay, Mr. Employee, you're going to post this journal or you're going to do this in the accounting records. And most probably the employee will be doing it because, you know, it's the boss who's telling me to do it, so I'm going to do that. So what the standard is saying is that management are in a unique position. They are able to override the controls that are in place to prevent fraud or manipulation. It doesn't mean that they are going to do it actually, but still it is a risk in every single audit. The standard further says that the level of risk will vary from entity to entity. The risk is always there, and due to the unpredictable way it can happen, it will result in a risk of fraud, and that risk is a significant risk because it is, again, a risk of fraud. So every single audit will have a significant risk of fraud, and then in paragraph 33, which also pretty much tells us the things that we should be doing. So irrespective of the risk of management override, we must design and perform audit procedures to test the appropriateness of the journal entries in the GL and other adjustments made in the preparation of the FS. So keep in mind, everybody, we will have journal entries which are passed into the GL, general ledger, as per our process flow, as mentioned already. Sometimes the client might give us the journal after we have imported the TV, or you could discover as well that a journal must be passed and adjustment needs to be made to the accounting records based on the testing that you've done. And also, there are other adjustments that would also be made in the preparation of the financial statements. So you have to bear in mind all of these journals in designing your audit procedure for the test. So we shall ask about any strange or inappropriate activity related to the journals. Now, we shall test some journals made at the end of the reporting period, because that's the reason that end of reporting period is of particular interest to us auditors, because this is the point at which, most of the time the financial statements are being drafted or the final results for the year available. So when, it will be the time when management finally gets a view of the big picture of what happened over the last year. And a scenario could be they're, looking at the FS and go, hey, it doesn't look good enough. And they might then want to manipulate the figures. Again, just to reiterate, guys, I'm not saying that it is going to happen all the time, but it is a risk that it happens. Okay, so the journal entries at year end, and the ones posted in preparation of the financial statements are quite of particular interest to us. For this reason, we will also, as auditors, consider whether there's a need to test journals and other adjustments throughout the period, because not just at year end, but throughout the period, because if you realize, let's say we put the hat of being a management, we know that the auditor will usually focus on year-end journals. So I might also be smart enough to say, okay, I'm going to pass the journals sometime during the year. So journals are quite of a particular interest to us, and how we'll deal with it in Audit International template. So we're going to see the need for our planning team to document the risk on the risk card, link to the relevant procedures. Also, the controls over journal entries are described and evaluated in the document 530, which if we have time, I'll take you through the document. I think we do have the, just a few seconds, I'm going to show you. This is the document where you're going to, not you, but your supervisor will be raising the risk, documenting the risk in the risk card. The objective is really to obtain an understanding of the components of the entity's system of internal control relevant to the preparation of the financial statements. And this includes identifying, documenting, and evaluating control design implementation, management actions, policies, and controls. So what controls are, this is something else that you will be documenting. Does the controls address the risks in the journal? Is there authorization? Is there supporting evidence to a journal entry, and more? So that's in a very, very rapidly the assessment of the design of the controls, and we'll be looking at that just now. And also you're going to assess, have they told us the truth? Can you go back to that evidence and understand that evidence? We also have the inquiry regarding journal entry activities is also performed in the document 670 in the general audit procedures folder. So whether the journal entries are at year end or during the year, the material journal entries are tested in most section of the audit, and they must be identified and tested. We do consider that testing throughout the period, as I've mentioned, and in each section in Audit International, in the procedures, will refer to the material, significant, unusual, year-end adjustments, and you'll also have the link to the relevant document where you actually test for those journal entries. So, as we've already mentioned, significant material, significant could be a slightly different number. We will then test those significant journals. They could also be significant for other reasons. So if it is a number that just pops out in this account, that is a journal entry, and it could be much higher than other numbers in the account, and then other also unusual because something we don't expect to see has been processed in our section, or it could also just be an odd type of journal entries, such as something that is debiting expenses and crediting revenue, for example. That journal entry wouldn't really make sense because we understand how accounting would work. So any unusual thing that we need to go and investigate it, you're going to get guidance through the program, work program 670. So all the questions I've mentioned is sitting in the document 670. We'll go there just now and I'll show you where the procedures are sitting. So what you need to do is, obviously, I've went a bit fast on that, so you have to go and ask about, was there anything strange going on in the journal entry? And as already mentioned, please do not forget about the journals passed in Caseware. These are still journals which are passed in the preparation of the financial statements. So you're not just looking at the GL, we are also looking at the general entries that are passed post-receipt of your trial balance. Some things to remember when we go through journals and we are testing journals, they should be tested to supporting documentation. And that supporting documentation could vary in nature quite significantly. It could be an invoice. It could be employment records, as mentioned earlier. In the example, it could be a correspondence with someone, an email, minutes of meetings, legal confirmation, for example, if we are making a provision, for example, so the supporting documentation isn't going to be evident sometimes up until to the point, you know, we talked to the client, we spoke about specific things. In cash and cash equivalent, for example, we spoke about, if you were there in our previous sessions, we spoke about bank statements, bank record. Last time we spoke about expenses testing, we worked with invoices. But in the case of journals, it really could be a variety of things that could prompt the journal or the action to pass this journal. So it can really be a variety of things that we need to go and look at the calculations. If there are, of course, calculations which get us to the journal, you shouldn't just accept it as it should like. Okay, we saw what the calculation the client did, we test the calculation, we get the number. That is not really testing the journal. You're not testing that the number is correct in any way. We're just accepting essentially that the client passed the correct journal. So what I mean is, by calculation and things that could give rise to calculation, it's something you may not be exposed yet this year, for instance, a provision for warranties. So they might do a calculation on how many sales they have had for the month or for the year. And they'll say, okay, historically, I see that we had that number of returns. We have had returns of this number divided by the sale. And so we get a percentage of the warranty provision, and then simply calculate 2% times whatever sales were for the year to get a warranty provision. So what you will do is test that calculation. In all likelihood, it has been tested somewhere else, but the point being, you cannot just accept calculations, right? So usually what happens with journal that is paused in case where it is something we've identified in the testing. Remember, for those who were there previously, when you process a journal entry in case where, we highly recommend you to use the referencing. So this action, we've already, I'm not going to show you that again. We've covered that already in other section where you reference to where the journal arises. So in the expenses section, when we have paused the journal, we went to Caseware, we paused the journal, and we've put in the reference to the working paper for expenses, so that someone knows that we have tested the journals in Caseware. So yeah, for those who were not there in previous section, please be careful where there is an unreferenced journal in Caseware. You would most likely ask the person who has processed that journal to perform a reference so that you understand where this is coming from and that can prove what has been tested. Finally, if it is a trivial journal, you wouldn't go into it. Of course, you wouldn't obviously test it. So more specifically also, if you get a journal from the client after you have imported the TB, but it's not something that you have identified on the working paper, please remember that this will be something that needs to be tested. Then, of course, yeah, that was one foundation I wanted to share with you. Then, as you already know, there are two sides to every journal. There is a debit and a credit in every accounting entry, as we already know. So if ever you reference your testing to another check section, please check in with your teammate that the testing is done. So for instance, if I know Sandrine did the testing of employee costs, for example, the testing for provision for leave pay or bonuses must be done by Sandrine because she is doing employee costs. And you are sitting on the other side of that, that is you are doing trade payables, for example, which is the credit side, the provision side. So what Sandrine will do, she's got all the debits sitting in the employee costs, and you've got the credits sitting on your lead sheet trade payables. You know that Sandrine should have done the testing in accordance with how we test things in, you know, our audit methodology. So what you need to do is come and speak to me, come and ask me after you've identified any journals in your section and identify that there is one of the journals related to provision for leave pay or bonuses, then you'll ask Sandrine, did you test for leave pay or bonus? Could you give me the reference to the working paper where you've tested it? And then hopefully, Sandrine, I will say, yes, of course, I've tested it. Here's the reference. Please use it, reference it to your journal. I've already done the testing. Because obviously there's no point for both of us to test the same journal. It's really inefficient for our thing. What I really want to share with you, the point here is to make sure that you check with your teammates that this, you know, that they said it has been done, that you can actually verify it. Also recommended to look at your journals holistically, understand what is the purpose of the journal. So what was the objective? What was the criteria coming from the accounting framework? That's your reference, which prompted this journal. Or what was the error that was identified? Or what was it that prompted the journal to be paused? And when they pass the journal, hello. Sorry guys, I just heard something on my side. I just want to check out with my teams that everything is fine. I know Helen, you're in the room. I just want to check out if everything is fine on my side. Okay, cool. Sorry guys, I just heard a noise in my earphone. I'm not sure what it was. Okay, so where were we? So we were around the journals and the purpose of a journal. Did it achieve what it's supposed to achieve? Does it make sense? You would actually have to go and ask your client for the documentation. Bigger clients, more corporate clients would usually have journal packs compared to the smaller ones, which the smaller ones actually would also have journal pack where they can provide all their supporting documentations with the journal where someone has signed it, has authorized it, and they can probably provide you with journal packs. But it's not always the case, you know. I'm in Mauritius, for example. I've not seen journal packs as such. It's, you know, it's not that simple where you have all the documentation one go, then you have, what you need to do is really go through the journal listing. So the questions that you might prompt to your client, for example, how did you know you needed to pass the entry? Or you can ask them, what can I look at to ensure that this journal entry makes sense? And then very importantly, is that sub-point number 4. I trust that you can see my cursor. Is that sub-bullet number 4 where the accounts are mapped in the trial body. So often, what you might look at is the account name, and in accordance with the account name, you can judge whether it makes sense, whether that journal entry makes sense. However, when you go and look at where it's mapped in the TB, and remember, by the way, mapping is determining where the account number is determining where your account number is sitting on your financial statements. So let's say when you go and look at the mapping, then you might find an issue. Maybe not with the journal itself, but actually with how that journal filters through to your financial statements. There might be a classification problem there. If we have time, there's an example that we'll go and see today around the issue with how a journal filters through to financial statements. So next slide here, and sometimes there's monthly journals that are raised and reversed. I'm sure you're all acknowledging, yes, this is something that we've seen. So some clients will do management accounts monthly, and they will pass a journal to raise some accrual or expense or payments or other. Then the next month, that will get reversed so that it is replaced with the actual figures. For example, if there is a scenario is those journals generally don't have an effect on the financial statement. So if the journal is raised, then fully reversed, that journal itself is fully reversed, you know, raised and reversed. The two journals, they don't have an effect on the financial statements. So we would generally say in those cases that the journal has been reversed in full. We've agreed, we've made sure that the original raising and the actual reversal all cancels out. And there's not necessarily a need to go for any supporting documentation because, you know, think about the big picture. Think about the end results. And if you think about the process slide, if you can go back a little bit in your mind, the end result is the financial statement. So if there's no effect on the financial statement, the client has raised and reversed it full, it doesn't touch the ethics. However, you still need to do some work to make sure that the raising and the reversal, of course, agree. Some of the journals are passed monthly, but we test the balance as a whole at year end. In some cases, there might be an accrual for bonuses every month before the reporting for the reporting purposes. The clients might raise the accrual for bonuses. Then we pick up these journals throughout the year. Then at year end, when we are testing the bonus accrual for the bonuses full, then we would usually look for those journals. And of course, you'll make sure to reference or state that this whole balance is tested at year end, which verifies every journal entry which went into the year end balance. Again, same principle as with the 2 sides to every journal entry. So please don't just assume that you make sure that that was tested. Ask your teammates whether you've checked it, you've referenced it to the testing, and explain the logic by proving the year-end balance. We have proved the journals which accumulates to that year-end balance, then you can obviously move on. If it hasn't been tested, then you need to go and find a way to test a specific journal that came up in your testing. So there's different ways that you can select and identify your journal entries. One of them being to pull them out of the GL, and the other one, so you can also pull out the, actually the one that came to my mind is the general ledger. You can pull out the journals from the general ledger yourself because you're identifying these journals in every single section that you're doing, or you would use Caseware idea probably to identify all journals passed. But if your firm is a little bit different, then they can use a journal listing to do the journal testing. It really all depends. I've added for you here on my screen a little screenshot of Caseware idea where you can really test for the balancers of the out of balance journal entries, whether they cancel out. For the reversals, there's quite a bunch of tests. If you want to know more about it, please feel free to connect with us. Today, we won't have time to go into Caseware idea. Just a quick reminder, please remember, in accordance with ISA 500, you must establish that the journal listing is complete and accurate before you select. Let me go back here. Before you select the journals over the listing for testing. Okay, so that's specifically, you know, in terms of completeness, you will need to test the debits and credits, perhaps also trace it through to a selection through to the GL, and for accuracy again, you'll perform all your different testing. And really, Caseware idea help you into the testing for completeness of your journal entries. In terms of the audit tests, how does it look like in your work program in Audit International? It usually will say to you, so if you look at my procedure number 5 here, it will say coordinate your work with audit procedures on journal entries. Refer to 670. So if you're sitting in a different section, so that is pulling from expenses, procedures, operating expenses, procedures. So if you are sitting in a different section, it will refer to the same thing. It's the same everywhere in Audit International. Then in that specific document 670, you will have a set of procedures to address risk of material misstatements in the financial statements. So we are going to go through and do our exercises. And by the way, that procedure 7 here is what you'll see in in the document 670, sorry. So now we're going to go through our exercise, the journal entries. So what we have done, we have already identified the journals to be tested. We have already done the extraction from the GL, and we are going to test some of the journal entries to the supporting documentation. We have not selected general journal entries from just one section, which is what you would usually see in your section. Let's say you're doing only operating expenses, or you'll then just extract journals whilst in operating expenses. But in our case, what we wanted to do is to cover a variety of methods in which the journal entries are going to be tested. So you'll see just now, let's go and open up your Caseware file, then you're going to understand what I'm trying to say in terms of what we have selected. Going to escape that stream. C'est pas working. So please open up your Caseware file for Wrap-Up Manufacturing Limited. Select Documents. You can see your document manager. And once you're opening on your side, maybe it's not yet open, let me quickly take you through. I'm going to open my case view. I really want to take you, as promised, just a few seconds on the document 550. So I have activated here my document guidance by going to Options, Display Document Guidance. You can read through at your own pace later on. So I've already explained that document earlier, which helps in, you know, if you look at point 3, evaluation of the design of implementation of controls required for controls over journal entry. So this is the node and all the different objectives. So you're going to see all the different risks that have been raised to assist you. So that document, you might not look at it at the moment because of, you know, you're just entry level. That will be a document that will be filled in by your supervisor. However, if you go to the risk report, let me see if we can activate the risk report here. We can even click on, let's first open up, before we go to the risk report, sorry guys, let's also open up the worksheet identifying fraud risks, where this is the section where you can see the mini risk report. So your manager will then document the risk, the management override of control risk in your documentation. So remember, in Audit International, it's not automatically inserted, so somebody will need to insert it for you. If you're using a template that has been authored by your network firm, then sometimes you have that risk which has already been documented. So whoever has done the planning for us would go and document that risk, and you will then be able to read through the risk. As you can see on my screen, there's a little star next to the risk, means it is a significant risk. So what we're going to focus on today in that 506 document, we're going to focus on procedures 4 to 7. So procedure 4 says, assign more experienced staff or those with specialized skills, document assignment of work to experienced staff or those with specialized skills on the document 513. So that's the document that I've just shown to you. The reason for this procedure being because management override requires that you need a little bit more experience and judgment to be able to identify that type of risk. Sometimes when something is unusual or fraudulent journal, that doesn't mean that because you're first year, you cannot do that, you will not be able to do the testing. It's just that in that particular case of a fraudulent journal, you'd need greater supervision in order to make sure that you don't miss anything with regard to that risk. Okay, so just also quickly moving through before I go to that document, On the document manager, if you press Control F, look for the document 670, which is your document called Use of Journal Entries. So remember, in Audit International, you will then be referred to the document 670 on your audit procedures for the testing of your different journal entries. If we look at the procedure number 1, it says obtain an understanding of the entity's financial reporting process and controls over journal entries and other adjustments. Understand and document management policies, automated procedure, any history, the assets, risk, and more. And you also have all those documents I've just mentioned, 530, also coming back here. So we are going to perform all of that. Once again, the session today is really to give you an idea of where you need to go to do all of that. Moving to the exercise itself. So if you press Control F, look for 671. That's your working paper, your journal working paper. We're going to open that for our exercise. So that is an Excel that will open up on your screen. Take a few seconds, just giving you 30 seconds to do that. All right, so let me just explain what's happening on the top part of our documentation. So you have your materiality. I hope that you're seeing my screen properly. Just gonna increase it a bit. So on the top of my screen, of course, you've got your materiality details popping up, reference to our document 420, our materiality document in Audit International 420 dot. Of course, if you were in operating expenses, you could also add your references to operating expenses in addition to the materiality document. The general ledger is, in this case study, is where we have extracted the journal entries for testing from the GL. We have also assessed the completeness and accuracy of the population of the journal entry, the general ledger, sorry, through other testing in the file. Then we have selected some assertions that we're going to test, that we are testing the material ones because there's significant risk, but in some of you will be doing the actual list of all the assertions. So the population, we have added a little gray box here because this would be usually the number reflecting the journals in this section. What we might actually want to describe here, instead of putting just a number in terms of the population case, to say that the journal entries passed in, let's say, operating expenses or journal entries passed in, you know, then you will just specify what journal entries, what material, unusual, significant journal entries of this section. Like you will give more information around this particular population. The sample size is not applicable because we are not going to select a sample with the journal entries for this exercise. Then you've got the sample method that's applicable again for this particular exercise. You would also, for this journal entry testing, reference to your work program. If you're sitting in, for example, operating expenses, you will then insert the reference to your audit work program. That will be here. And the step that you've performed in the work program, that will be procedure 1, 2, or 3, etc. So again, referencing is extremely crucial in this. If we scroll down on that Excel, you've got a section called example of testing. So we've specifically called this example of testing so that you understand that it is just an example for this particular case study, because we've got a variety of journals that we're going to cover today. And I've already mentioned, maybe you won't see the both sides when you're performing the testing, but yeah, we just wanted to give you a holistic view. So if we scroll down to the first part, someone has gone through and extracted these journal entries from the GL for us. So we've put here the information. So if you look from column B to H, we have information relating to the date, the account number, the account name, the journal reference, the debits, the credits, and the description. As you can see, all this information has been extracted from the journal, and it's not just, remember all our exercises, it's not just a copy paste. We have clearly, that person has clearly inserted the step, not the step, but every single column has been nicely copied and pasted into this. It is also crucial that you have, when you copy account numbers, that you also associate it to an account name. If somebody else is reviewing your file, that person should be able to read through and understand what an account number relates to. If you don't put an account number, think of your supervisor. You guys are also going to be supervisors in the future. You might need to go back to the TB, go back to the GL, try to understand through the whole TB, what is that account number, what is the account name. So very important that you insert it here. And you can also, from this, understand whether an account, a journal entry will make sense or not. So very important that you insert here. So journal entry number 1. We start with that journal was processed on 30th of April. So that's the year-end journal. We can see that we have a debit for accounts payable or debit for 35K. We have also a credit to discount received, a credit amount for discount received and back control. The journal reference provided in the general ledger was CPI 5%, CPI 5% discount APR 2023. The reference here actually is APR 167, and that was the description. The API one was the description. We have also inserted here the amounts. So also remember, in your section, you will see only one part of the journal. So you'll need to search for the other parts of the journal. So let's say you were doing accounts payable, you will see that line. What you'll need to do is look for the other parts. So you can put the full journal entry onto your working paper. Please, yeah, it doesn't make sense for us to just put one leg of the journal entry, because it doesn't really help in the assessment of whether it is appropriate or not. You should extract the full GL, which means that you have to go to a section in the GL or an account in the GL, which is not necessarily on your lead sheet, but you need to extract the information to get a full picture. So once you get all of that, we went to ask our clients, we went to ask our client to explain to us what this journal was for. So sometimes you might need to ask the client or even give them the sheet of the journals, or maybe they can also provide you with that sheet, but usually, yeah, you have to prepare something and ask them for the supporting documentation or for the journal back, which has a reason for processing the journal. We can see the reason here, which says CPI discount 5%. But again, the reason or the journal, this is something that you will get from a back or by asking the client. There's no hard fast rule. Of course, every client will be different. It depends on the control that it plays. So here In that case, in that scenario, we asked what is the journal entry, and they said that it is discount claim from a supplier because there was an early settlement of the balance outstanding. So now what you need to do is to go and do your testing for this journal entry. So I'll help you because I know the client, I know the file. I'll tell you that they have said that they are claim discount from the supplier. So you can already think about if you claim a discount on a supply from a supplier, it means that you need to decrease the amount that you're paying to the supplier, right? It means that we would need to debit your creditors control account or your accounts payable account, or maybe a specific creditor account will need to be debited. Again, the accounting system of each and every client is going to be different. So you have to think about your framework, think about the accounting entries. So this entry looks that it makes sense. We've reduced the amount payable, and then we debited our accounts payable, which does make sense, and we have credited the discount received. And I would expect that this discount received is credited if you think from, if it can make sense for you, it's like an income because it's credit. And then because the client, our client is a bank, our client also have a VAT component, there's a VAT implication here for the discount received. Again, we need to pass it against the claimed input VAT. That's why we also have this portion around VAT. But then what it means that we've paid over less money when we paid to the creditor. So we need also to account for the adjustment on the VAT. So we can see that it makes sense the way that the accounts are affected and the way that the journal entries pass into the accounting records. So for now, what we need to also do is ask for any supporting documentation. You can't just accept the truth that, okay, it makes sense, but what about the supporting documentation? If you open the folder that we shared with you, so I'm going to show you, there is a supporting document folder. There is a client called CPI. Double click over that statement. So we're going to take a break in 2 minutes. So now we can see that this is the statement relating to Clear Prints Inc. The document was called CPI Supplies, right? And we've got here a statement for Clear Print Inc. So it looks like CPI. That also was in the reference. So this is the documentation again that was given to us because we asked the client, okay, guide us why you needed to process that journal. How did you know that you needed to process that journal? So they've given us that statement, and it seems that CPI does tie up with the description in the GL. Sometimes, and you can also see if you refer to the email, CPI does look like, if I go here, CPI does look like it's that supplier itself. In most cases, you won't have those, clear-cut description, so you might need to investigate further. Anyway, the statement is dated 30th of April 2023. It is for wrapper manufacturing. That is already something I'm happy about. Then if you look at what's happening on the statement itself, we've got a balance brought forward of 1.8 million outstanding. They have paid on the 2nd of March. There's an invoice on the 28th of March of 713,000 rand. And then on the 25th of April, they've paid the supplier 677,000 rand. So, and the invoice against the payment looks like a little bit like a short payment. However, if you look at the last line, you can see that here we've got like a settlement discount. So that's quite clear-cut and easy to understand. If you look at your journals again, 35674, 35674 here. Also, if you look bottom of your screen, it says reminder, early payments receive a settlement discount of 5%. I'm sure if you do the 5% on your side, you're going to get this 35,000K. And it also says balance due in 30 days. So we can clearly see, if you calculate it, the invoice was on the 28th, they paid on the 25th, which is before the 30 days. So they're in line with the terms of the supplier. They are entitled to the discount. And you can recalculate it on your side, but I can tell you it's gonna work. So we can clearly see that the statement is accurate, the processing is accurate, it's also making sense. So what we can further do here is also comment. So I'm going to, and then we can go for the break. So if you scroll to the right of your screen, under confirm rationale, we did confirm the rationale. I'm going to use my little green tick mark. Evidence examine. So we're going to say, what is it called? Clear print inks. So we're going to say clear print inks. Okay, we're going to say rather not inspected 30th April 2023 statement from clear print inks and agreed discount on the statement to the journal. Guys, I haven't opened my calculator, but you have to do the calculation on your side. Use a calculator, open up, type 5%, and you're going to get that. It's just that we are short of time. That's why I didn't do it. The terms of the supplier also support the journal entry. Then there's another question here. Does the entry result in the appropriate measurement in terms of IFRS for SMEs? So we're going to say yes to that little question. So what I want you to think about is this working paper is crucial for us to fill in, because someone will then know that we've gone and inspected a statement, we've inspected some sort of supporting documentation, but it is also a third-party documentation that has given us the discount amount. Okay? So, in terms of that little tick, does the entry result in appropriate measurement in terms of IFRS? So what the accounting framework requires, if we claim a discount received, if you look at what the discount received is, so I can clearly tell you that in our case study, Clearprint X is one of our suppliers who give us ink, actually, Welcome back, everybody. Time's running. I hope that you've been able to grab a cup of coffee or something to drink. So please do raise your hands if you're back in the room, if you're ready to proceed with the next part of this training session. Quickly checking out the attendees lists. I see some Mauritian names in there. Just let me know that you are back, and we're starting in 30 seconds. Yes, thank you, everybody. Thank you, Doreen. There's actually a new Doreen who has raised his or her hand. Okay, guys, I hope that you're back online. So if you would recall, just before the break, we did our first journal entries testing. It's been really, we've gotten a little bit fast because we're, short of time, but I hope that you grasp the concept. We're going to now move on to the journal entry number 2. So journal number 2 was passed on the 31st of December 2022. It was a debit to leave pay and bonus provision accounts and a credit to full, saying new. Okay, guys, just give me 1 second. I'm quickly gonna my cost. Okay, here you go. Hope that you can hear. So there was a debit to leave pay provision, leave pay and bonus provision, and a credit to provision for salary bonus. Now, everyone, I can tell you that this account 4400, if you should follow my cursor, it is generally indicating, it indicates actually that it's coming from an income statement. It's an income statement account, and the lower numbers are usually the income statement account in the accounting package of this client, and the non-400s will be in the balance sheet account. We will show you just now the lead sheet so that you understand what was spoken, what I'm talking about. The general reference the client has for this journal is PROV. And for those of you who were here last time, you might also recognize this journal from the last session that we did. We did discuss a leave pay provision, a bonus provision in our reconciliation of employee costs. So this journal is a debit to leave pay and bonus provision of 60,000 Rand and a credit. It's actually the other way around. It's a credit to leave pay provision and a debit to salary bonuses. So the provision for salary bonus, there's not just, it's also, so the account number is 9400 or 20. So if you open up your Caseware file, and if you go to trade and other payables lead sheet, you will see that there is a provision for salary bonus account there. So let's do that together. If we go to Caseware trade payables lead sheet number, for those of you who are not sure, lead sheet 630, trade payables lead sheet, you will see if we scroll through, there is here a provision for, if I scroll down, a provision for salary bonus account there, 940020. So that is the liability side of the entry. And if we open up the operating expenses, or maybe it's a cost of sale, let me see, I've got the cost of sale open there, leave pay and bonus provision expense on it. That's my cost of sale lead sheet 720. So, yeah. Right. So, sorry guys, for that journal entry should have been actually the other way around. I've copied it, I'm not done it properly. So as you would have also seen it on the lead sheet that I've showed you, that the signs should also be able to guide, but we'll come to that just now. So let me see back on my lead sheet, we can see clearly on this cost of sale lead sheet, leave pay and bonus provision sitting there, 720,000. So now remember, because there's a our client is a manufacturing entity, so the employee costs which are directly related to manufacturing will go to and will be mapped to cost of sales. So that's explain why I'm looking at cost of sale. Maybe some of you saying, what is she saying? Why is she looking at cost of sales? So it's just because that was explained last time into our case study. It's a manufacturing entity. The direct employee costs are going to be mapped to cost of sales. So let's go back to the working paper. Journal's working paper and the description of the general ledger. What was the description? Actually, my screen is extremely small. The description is monthly provisions. Monthly provisions, December 2022. The reason that the client said to us was that they've paused this journal is because if you scroll to the right, raising provision for bonuses. So in this case, we're going to do a different principle in terms of showing you how there are different ways that a journals could be tested. So in this scenario in particular, we're going to pretend that you haven't been responsible for testing provision for salary bonuses last time, okay? For those of you first time in this session, it's perfect. For those of you who were there last time, we're going to pretend we weren't responsible for the testing of provision for salary bonuses. It was done by somebody else who did the employee costs, and that person tested the provision for bonuses in that section when they did the employee costs. So remember what I've mentioned to you before. You have to ask to that person, that teammate, and to ask about the testing that they've done. You cannot just say confirm rationale or confirm evidence. Okay, it's good. It's all fine. It was tested by someone else. What you need to do is ask the person about, you know, have you tested it? Have you have any reference that you can share with me so that I can understand what is being done? So I've already done that for you. If you look into the folder, the supporting documentation, there is an email, a PDF of an email which is called provision for leave pay. So please open that. It is an email from Brandon who has done the testing. So we've asked Brandon, have you done the test? And Brandon has emailed to us saying, hi trainee, that is me or that's you. Yes, I have tested the provision for bonuses at your end in the testing of employee costs, and the working paper reference is 754. So you have emailed Brandon, and we know Brandon was responsible for employee costs. So we've asked him, did you do the provision, the test for provision of bonuses? It actually came up into my journal entry testing, and we would like to, you know, reference to your working paper if you have tested it. And that's the reply. All right. So now if you go back to your working paper, what you can type in here, what you can say is journal has been tested through testing of the provision raised in total at year end. Refer to working paper 754. Was it 754? it was. You can even wrap it up a little bit, make it nice. Going to put that in maybe in red. Nice referencing here, so that somebody else would look at that part, rational evidence. Does it fit to the framework? No, that's okay. Now, if you go and look out for the working paper 754, that will be on your document manager. I haven't included it for you, but the principle would be you would go to the document manager, refer to the document, make sure that the testing has been made, that it makes sense, and that the journal was appropriate. Now, so for your purposes of testing this journal, what you've done, you've confirmed, then you can say, okay, I've confirmed that the journal has been tested, and you're done. And because you are a first year, you don't need to go and review, you know, Brandon's working paper because he's the supervisor level, unless, of course, you're a senior, or if you're responsible for reviewing his paperwork, then of course you'll do that. But usually, what you can do is you can look at that the journal was tested, that came into the journal testing sheet. Right, so that was another method to complete that journal entry. Let's move to journal entry number 3. Journal entry number 4, by the way, guys, you will do that on your own homework, and you can email us any question. We're going to do any journal number 3. For journal number 3 has been tested for us, but again, I will explain as we go through on this journal. So once again, we start with the date. The journal was for 30th of March, 2023. It was a debit, a credit, a provision for credit notes, debit provision for credit notes. The journal entry reference, journal reference is CORR, and the credit is sales manufacturing division, CORR, same amount. The account numbers, 8070, that would be your provision account, and the 1000s, because I know the client, this relates to the revenue account. The description in the general ledger relates to correction of March journal. What this tells us is there must have been some prior past journal, and this particular journal here, that one, is correcting something that was already done. Right, so now let's just go and take a look at where this provision for credit note is sitting. So some of you might, say, okay, Solin, this is quite obvious. We should know where this is sitting. But remember, it is a provision for credit notes, which usually sits in the trade and other receivable lead sheet. So if you go and find your trade and other receivables lead sheet on your document manager, once again, you can press Ctrl F, you can even type trade receivables. Alternatively, you should by now be familiar with your document manager. I'm going to collateral folder. If you go to lead sheets, current assets, folder 430, trade receivables, there's the document, automatic document 430. Please double click to open that. Because if you know that there are credit notes that are going to be posted in debtors and the revenue that we have accounted for at year end, but we know it's going to be reversed shortly after year end, it will then most probably be going through this this lead sheet. So here you go. That's the provision that has been reversed for your credit. So the provision for credit notes actually offsets against accounts receivable And that 1000 account, if you go to income statement folder, revenue folder, you will see the revenue lead sheet. And okay, let me show it to you because we have to do that together. If we go to revenue lead sheet 700, so what has happened here, you'll see the revenue that the number went against 1000. So we can't see any other number that 1000 has. Let me go back here. That amount, correction 5000 has gone into the revenue amount. There's no separate account for the provision for credit notes on the income statement side. It went straight to sales account. All right. So what has done, they have reversed the revenue, which they know, which the client knew that it is not going to be, reversed shortly after you end. But in our case here, they are correcting this provision for credit notes. So they have paused a journal to account for credit notes, and that journal was actually wrong. Now, what they've done on the 30th of March, they decided to post another journal to correct that journal entry. That's what actually happened. So the client told us that this journal was a reversal of an incorrect amount. So that's what we've inserted here, reversal of incorrect amount passed for the provision of for credit notes. So if you look at the way the journal is actually going, again, so here, if you look at the way that this particular journal entry is going, we can actually see that they had over-provided for credit notes, because now they are reversing some of the amounts in the provision for credit notes and reinstating it for, let's say, a lack of, that for the revenue that was incorrectly taken out. So what they're telling us, actually, that reversal of incorrect amount passed, incorrect amount passed for the provision of credit notes. Does it make sense? Does it make sense for you? Is that actually reversing an incorrect amount passed in a credit note? So first, if we look at what the testing was done, so if I move here, if we look at what the testing was done, and the person that tested this journal has inspected the general, so you can read through with me here, I've also inserted it on your side. The person has inspected the general ledger accounts and agreed the journal to the original one that was passed in March. That was an initial incorrect entry that was done. We checked that, and then they confirmed that the reversal is correct with a nil effect on the accounting records. So there's no effect on the accounting records. So it's very important to take note of the principle. We just wanted to get across this one. Somebody has gone and looked at the original entry, then looked at the reversal and made sure that the correction was appropriate and correct. In this case, it would appear from the evidence examined that the full original journal was reversed, and then probably later they paused the correct journal. As you can see, we do, if you look at, again, if I have a look at the amount 5,900, if you look at this trade provision for credit notes, there's an amount there. We do have a balance on those accounts, both revenue and trade receivable section. So those provisions would have been tested somewhere else by somebody else. So within the case of this correcting entry, we would go and expect the original entry reverse. whether it makes sense, it did make sense, whether it resulted in appropriate accounting for the purposes of SME or full IFRS, then of course get the reason from the client, make sure that it also makes sense. It does make sense here, and once again, this would have already been tested. We would have also linked it to other testing by our team members. I'm going to leave the journal entry number 4. You can then go and do the testing on your side. I have included the results as well for you and all the different comments. Please feel free to come back to us if you have any questions. Now I'm going to go back to the slides, and by the way guys, the slides are provided to you as well in the chat box. You can also refer to that. We're now moving to related parties. It is also a special little area and quite of particular interest in auditing standards, because it is a place where there is a potential for manipulation. And also this touches lots of sections, so related party balances and transactions could appear anywhere on your file. So it's not just something which is that you would usually do specific to related party section in the file, but you see just now the information has to be gathered throughout the orders by the whole team. It is complex to have just one person allocate the related party section to actually go and identify all the transactions as well as the balances. They're not just sitting on just one lead sheet or on the aging debtors or creditors. There will be transactions that might be in sales, in expenses, in cost of sales, in so many sections that will need to be identified by the team. So just keep in mind, this is why we are covering related party in the course, because you might not be allocated the whole section, but you should be aware that when you do related parties, you should identify those transactions and communicate them to the whole team. In terms of the process flow, our famous process flow, I really love that slide. Thanks to the team at Caseware who prepared that. So again, the financial statements come from the trial balance, which again comes from the general ledger, which then comes from, in some cases, the sub-ledgers and journals, which are pulling from a source documentation, and of course an action was taken. In the case of related party, that one is a little bit broad. So for instance, the action in particular would be we sold the goods to a related party. We would probably deliver those goods to the related parties. We've invoiced the related parties for the goods that we've sold to them. So we have a source document, which will be, of course, an invoice because it was a sale that goes into the sub-ledger. A sales ledger will then be going to the general ledger, then through the TV, then goes to the financial statement. In addition to that, sitting in the sales account in the financial statements, remember that related parties is a particular disclosure area in the accounting framework. So if you are dealing, I know most of you in the room here are dealing with IFRS or SMEs, as well as if you're in Mauritius or other part of the world, we also have the full IFRS guys or clients. There's particular disclosure and notes in your financial statements. So apart from sitting in the TB, the numbers sitting in the sales, we also need to look at how it is disclosed in the related party note. So it's almost sitting with that, underlying other. You see trial balance and other, because it's an extract out of the GL to disclose something specific related to a specific company, a specific person, or other who is our related party. Then in terms of the financial reporting framework, again, we've got the accounting framework requirements. Then we have the full IFRS or IFRS for SME. We have a related party section, and that section says that these are your related parties. The definitions, we also have the definition in the financial statements. Here's the definition. Here are the disclosure requirements. Then we come along in our audit and we will look at the financial statements are prepared, how they are prepared using the IFRS for SME, if it is an SME, how it is disclosed. So when we audit the financial statement, we will ensure that the disclosure is complete and accurate. So usually what will be your risk here, and what we are going to look at today will be mainly focused on the presentation and disclosure, whether it is appropriate. So, why is there a focus on related parties? Well, again, in terms of ISA 550, there's a whole standard related to your related party. I encourage you to go and read through that. So what the standard says is, in some circumstances, there's increased risk because as an accounting system, do not have the capability to account for these transactions differently. A bunch of these transactions will be in the normal course of business. If you think about it, we make a sale, we purchase, whatever the case may be, it is accounted for like every transaction in the system, whether it is from a related party or not. Hence, it can be, that we can have a client with a complex group structure or complex transactions, which is for us difficult to understand. So there might be risk of manipulation there. Transactions, for example, could not be on commercial terms, so this can also be an issue. It's just that, usually that's what the disclosure is all about, is to explain to a user, somebody else reading, what is the impact that our relationship with the related parties has on our financial statements. Also touching on that transactions, not on commercial terms, it is used as an indication that there is a related party relationship. The standard, the accounting framework doesn't say everything must be on commercial terms, but it does say that if the client does describe in the FS that the transactions are at arm's length, then we would have to test that. There's no such statement in the FS, so there's nothing that says, if there is nothing that says the transactions are arm's length, then you wouldn't need to make sure that the transactions are arm's length. It's just a little bit of a risk because there could be manipulation of figures, once again, with the transactions that are not in our normal course or on commercial terms. So fraud, unfortunately, fraud can be more easily perpetrated through related parties. So let's say, for example, if I'm a director of company A and B, I can, make sure that they transact together or fake a transaction in order to get a certain picture across both companies. If you think about it, this would usually be for tax purposes. If one entity is currently loss-making and the other is making massive profits, then to reduce or to balance the tax payments, might transfer out some profits. That's illegal, we agree. But then, that's the reason why we're going to identify the related party transactions or balances not disclosed to us that gives rise to the specific procedures in ISA 550. So if during the audit you identify that you've seen that there is a particular person that, you know, there's specific terms for this person, that you actually have some special, you know, treatment. Then what you need to do is actually go and, you know, have discussions, investigate, and, you know, if it is a related party to the director of the company, we have specific procedures that we need to do around that. Then you need to always make sure to go back and look at ISA 550 to get the guidance on why it is that they didn't tell us about this related party. Please remember that if you discover that someone discover a related party, not that we weren't informed of that, they're all procedures, they're a bunch of procedures that you need to do. Okay. To move that now. So once again, there are certain steps that need to be performed before we actually raise a risk. There are specific criteria for questions that need to be answered in planning documents in Audit International. There is no automatic prompts in Audit International for raising that particular risk. So that is something that will need to be done by your supervisor at the planning stage. So the first part of it is, firstly, are there even related party transactions? That's a question that the person responsible for planning will answer that. If you recall, on Audit International, there is the, let me quickly show you that. We won't open the question, but just to show you where this is pooling, the optimizer checklist, there's a question there. Do you expect related party transactions that are going to prompt other procedures in your work programs? So this is something that your manager will do. So if there is related party transaction and balances, if your supervisor says yes, so where do the related party transactions come from? As already mentioned, there is a definition usually in the accounting framework. So both IFRS for SMEs would have a definition of who qualifies as a related party. So when you go and assess if someone is a related party or not, we go and you open up, you know, those big textbook. I do have one at home, very big textbook, where you're going to look through the definition of the related party. If you tick all the boxes, because remember there's a list of criteria that you need to consider. If you tick the boxes that the person or the entity is a related party, if the accounting framework you're working on with does have it, or if you're working with an accounting framework, I'm not sure we have people in the room not following it, you know, and I'm sure we don't have anyone following an audit accounting framework, but if you are, you know, you don't have a definition of a related party in your accounting framework, you need to default back to the definition of ISA 550 about who is a related party or not. Just mentioning, just because the accounting framework doesn't separately deal with related party doesn't mean that it's not a risk in terms of auditing requirements. So going back to this slide, the first part of the criteria is to define whether they are related party transactions. The second part is, are the related party transactions significant? Because if they're not significant, we're not concerned. It probably doesn't then give rise to risk, but if it is significant, then we are gonna, you know, go through to the next step. So significant means material in nature or value, or it could be significant in some other way due to the nature, volume, or just the number of transactions that are you know, that number of transactions that is going on or happening into the client's file. Sometimes the one entity is only transacting with one specific related party, and that related party is the only customer. Then this situation, that example, would make the related party significant in terms of their operations. And then third criteria is all the significant related party transactions outside the ordinary course of the business. So for that criteria number 3 is all about the significant related party transaction outside ordinary course of the business. So in other words, not within normal activities of the entity. So this is really a bit of a judgment made here. Again, these questions are also sitting in the planning stage because this is at the planning stage, that is where your team supervisor will decide where the risk lies. So don't panic if you can't make a call just now about whether it is not within ordinary course, but you definitely get there as you grow into your role. But usually, let's say if I sell an item to a related party, let's say I usually sell clothes, but now I'm selling a chair to a related party, like a big expensive one with leather and all the stuff. That's not within my normal activities of my company. So that's generally a transaction outside ordinary course of the business. But that being said, remember that you need to first have to jump through the question. Number 1, is it a significant transaction in the first place before we go to the consideration of whether it is, of course, outside the ordinary course of the business. So really depending on the criteria, depending on the value, in this example, of the chair, then maybe it's not significant. In the example of wrapper, let's say if it was a machine, a big manufacturing machine, then probably it would be significant, would be outside the ordinary course of the business. Then we will need to consider and look through the related party transactions. So why are we so concerned about transactions around, outside ordinary course of the business? Is because those transactions are usually easier to manipulate because they are, out of the ordinary course. The clients often get the accounting wrong because maybe they intentionally get it wrong. Often the disclosure is lacking on the financial statements as well. So this could lead to misstatements in the financial statements. And because they are outside ordinary course of business, this is a big consideration with regard to the financial statement or other figures. Now, moving next here. So when the risk arises, so when we tick the boxes for all the 3 considerations, and you have the transactions with related parties. They are significant, and you have, some of which were outside the ordinary course of business. Then your supervisor and yourself would raise that risk in Audit International using the risk card. When that happens, then we need to go and do some things such as inspect any agreement, any contractor agreement, evaluate whether it makes sense that they had this transaction. Was it something that they use as a vehicle to conceal some fraud or misappropriation of assets? and all the terms of transaction consistent with what management is telling us. So when we look at a transaction, what has happened in the transaction is consistent with what management tells us happened. And then, as I already mentioned, has it been appropriately accounted for and disclosed in the financial reporting framework, especially in the financial statements. Then if you look bottom of the screen, 23B, that is quite important, which is obtaining audit evidence that the transaction had been appropriately authorized and approved. Remember, outside ordinary course of business, so it's not a normal sale or purchase. Someone must have approved the transaction. So it's not that just someone's going to steal something or, you know, what we need to do is make sure that we obtain that particular evidence. So what do you need to do when you come across a related party transaction? So, of course, for the first few months, you might not do that if you're a new intake. However, what you need to keep in mind is when you are auditing your section, you need to know who the related parties are. So we actually have to know who was identified as a related party. Usually, you would find this somewhere in planning. There will be a list on the planning minutes. There will be a list of related parties that you need to go and read through. Sorry. So if you go and look at your planning folder on Audit International, there must be something that has been covered in the planning meeting to say, here we go, here's the list of related parties. Sometimes you could find a group structure, an organogram in the planning section, which shows you who are the related parties. It is crucial that you understand who the related parties are, because if you don't have an idea of that, you would absolutely have no chance of identifying who the related parties are when you come across a transaction with that related party in your section. So let's say, for example, if I'm doing the other expenses section, then I come across the rent expense, which is actually payable to a related party. What I need to do is talk to the next person sitting next to me or to my supervisor and tell them that the team member who's doing the related party section, hey, I've got that rent expense, which is with, let's say, wrap-up manufacturing properties. Here is the total transaction amount that has been identified. What should we do? The person doing related party section will then be able to complete on their side their schedule, and then they can also document what was identified and how that was identified. So you will really need to talk to your team member that you've identified something by going through the general ledger accounts, that you specifically identify those transactions, and that should help them on writing up their related party schedule and also perform their different inspection. So at planning stage, maybe if you didn't identify a transaction outside that ordinary course of business, maybe you're testing something, you identify a transaction, it's an odd activity to the client's normal activity, and it is a related party, it is significant, you have the identified criteria, you ticked all the boxes, you would need to inform your senior and the rest of the team. Hey team, I found this transaction, it seems outside the ordinary course of the business. Maybe initially, maybe you're just listening to me like, okay, right, she's darling, how can I find this? Maybe, I also recall my time, maybe you would, at first, you might need to ask your senior, hey senior, I found this transaction. Is that something that I need to go further with because you just don't have the experience to judge? Then they will help you to make a decision up until you get experience in detecting all that. So then you will agree with the disclosures to the accounting records. We're going to talk about that in a few moments. Time's running. I know we need to go for a break. Bear with me for 3 more minutes. And in the financial statements, you will also need to look at whether the transactions was mentioned to be arm's length, that you will test for this, and if you are allocated the related party section, that bullet one is quite relevant for you in terms of keeping the related party in mind. So we're going to don't think we have time for that. I suggest that we take a 10-minute break once again. And when you're back, we're going to do a little exercise on related party. And we're going to end up with the next section, which is around other income. Let's take a quick, short, nice 10 minutes break and see you. Welcome back, everybody. That was an express 10 minutes break. So you know the drill down. I'm going to expect you to raise your hands to make sure that you're here to participate into our last 45 minutes together. This is going to go very, very quick. Thank you, Shintani. Really appreciate. All right, guys, please do raise your hand. Let me know you're here. Hello, Shelter. How are you? So we are dealing now with the related party section. Thank you, Brendan. We are dealing with the related party section of our audit. So the document 666 in Audit International will be your related party working paper, audit work program. So today we're going to focus on that. Also, onto your document manager, I have inserted for you the Excel spreadsheet, also referenced as 666. It is the related working paper that has been prepared by the person who got allocated to related party. So right at the top of this document, you've got your usual materiality figures pulling for 420. Today, we're going to really focus on presentation assertion, presentation and disclosure. We're going to assume that the related party is complete and accurate. The transaction has been disclosed. That has been disclosed will be tested. We won't necessarily go all the way through occurrence, but yeah, we're going to show you things to consider in terms of presentation and disclosures. So if you look at your work program as well, you will see, if you can't see your risk card pooling on the top, you can always click on the red button, your risk button, red exclamation mark here, to go and look for the risk relating to related party. Remember, you can click on the doormat top left of the screen. Let's look for related party transactions. You can see here the description, what can go wrong, and also the risk scoring on this particular risk card. Then going back, why do I show you that? It's because I want to show you where we got here the risk of material misstatement pooling. Once again, if you look at your FSA as well, you'll see right to the bottom of the FSA, you will see your related party line and the risk of material misstatement not scoring over there. The population is not applicable, the sample size as well not applicable for this exercise, or sample method as well. So we've got here the reference for our audit work program, 666 dots. The audit work performed. Let's look, it says here procedure number 5. Did I insert it properly? Let me quickly see. procedure, actually it will be procedure number 1. So let's change that. Should be procedure number 1. That's the procedure I have inserted for you. So procedure number 1, let's quickly look at the procedure number 1, which is to select material transactions with related parties. So we are going to follow through to supporting documentation, obtain evidence to confirm validity of the assertions. In our case, there's no disclosure in the financial statement that transactions were arm's length. So the procedure, what we're going to focus here will be on, I'll take you through the different steps. So basically what we're going to look at now on the working paper is how the related parties and balances were tested. If you go back to, my cursor is not working 100% today, it's Friday. So if you go back to your working paper, if you scroll down, there is the related parties list. So this has been copied onto this working paper. It has been agreed to the related parties identified at the planning stage. So we've extracted it, we've pasted it here, we've got some directors. So we've listed the directors because they will be the related parties. We did identify a close family member of the director, who is Susanna Tick. There is the companies controlled by directors was Wrap Up Properties and Plastic Friends. So how do we know about this relationship? Well, different ways. You would have to ask. We would have to go through the related party definition. But if you are dealing with a client for a long time, you would already have this information and what the relationship is. You can also, for instance, go through the prior year financial statements and also get all this information. If it is a new client, then what you need to go is again go through your planning section and find the different lists. So so let's do quickly going to go through. Right, we've seen the relationship here. We've got the shareholder with controlling interest, Larry Attic Trust. Then there is one shareholder. Okay, we've seen that. Let me scroll down through here. Like I mentioned, there is one shareholder who has a controlling interest. And because we have transaction and balances with Larry Attic Trust, we have the strata relationship right down at the bottom of the file, where there's a little note that says, based on the testing performed throughout the file, inspection of the minutes of meetings and directors disclosed obtained from SIPC, no additional related parties were identified. So a team member has inspected, they've ensured that the team has looked for any additional related parties. We've looked at the director's disclosures. We didn't identify anyone that we didn't know about or who wasn't listed. So Larry Attic Trust is listed in our on SIPC, not only because we've got transaction and balances, but also he's also listed on the list of related parties. So we're going to make sure that we have identified everyone on the financial statements. IFRS says that you should disclose your subsidiary, holding, ultimate holding company relationships. Then for the other related parties, only disclose the relationship where there are transactions and balances. So what has happened on this working paper is someone has gone and found out all the disclosures that should be. So there will be things which will happen in the related party. So we will look at, or the client might actually have a related party schedule. That's improbable though, but then We can also look at the prior notes. If your client doesn't have a listing for related parties, you can have a look at the financial statement of last year, where you would probably have all the workings or your working paper that will establish all these headings, whether you've got trade payables, loans receivable, transactions, and more for these headings. And yeah, this could be a nice starting point for you. The financial notes as well could be a reference, because then we know that these related parties were listed there. And it's also a good check to make sure that once again you have completeness of disclosure, but by looking at what was last year disclosures. Otherwise, if it is a continuing client, then there will be prior related party schedule, which will be just rolled forward to the current year, and all you need to do is fix up the headings. Make sure that your figures, when I say fix up the headings, it will be those headings on the top here. Gonna fix that up, just copy and paste it in the respective column. In the case someone has gone through and started the working paper and put on the identified transactions and balances that they found, so then you just gonna make sure that these are correct. So whoever did the trade payable section has identified that we had, so in this example, somebody has done that for us. We have identified that we had transaction with plastic frames, so there must be one of our suppliers. So most probably, once again, on the age analysis for accounts payable, we went and saw their name, plastic frames, there, and listed with an amount of, for the current year, 190,000 rand. And then they also have last year amount appearing on prior year financial statements. So let's also take a look at the tick marks to see where did they get the information from. So it says APA. If you scroll down, agree to payables age analysis. So they've gotten this off on the age analysis of prior year. So if I scroll up, of current year and prior year, they've agreed for the current year, sorry. For prior year, they've agreed it to the signed financial statement. So please be aware, whenever you say agree to prior, you must be specific about, so we can even insert it here, because let's make sure we insert the correct one, agree to prior financial statements. We're going to paste it here, and we're going to be really specific. Sometimes you might get a prior figure from prior comparative on your lead sheet. Then please do specify it that you've got it from the lead sheet, so that the person reviewing the file understands. Okay, so we extracted those and we've agreed, and make sure that all of the figures are pulling there. We've agreed appropriately to the financial statements. If you have a look, you should follow my cursor. As per draft financial statements, the trade payables have been agreed to the age accounts analysis. So we also have it in and it should say two brackets. We've got it in bracket here, and there's also no difference really. If we now move to, we've got the loans from. So let's fix that up. It should say loans receivable from, payable to, in bracket. So let's make sure we're specific and we insert properly the different names. So we know that when it is payable, it will be in brackets. So there is a loan from S. Hopper. So there is an amount, but we don't know yet where it is coming from. So that's a little exercise that we're going to do now. There is also a prior value. So let's quickly do that one exercise. So if you go and look for loan receivable or payable from related parties, there will be on your document manager, if you start by looking at, let's start with the non-current assets and loan to from shareholders or stakeholders, 334, 348. There is the loan here, loan to, or loan, to Hopper, loan to stakeholder, 134. So if we go back to our working paper, we're going to say we've matched this to 334. 348. Guys, it's Friday today. So that's the lead sheet number. So we're going to tell whoever is looking at this lead sheet that we've got this figure from 348 lead sheet. It's in a red color, so it's reference. There's no prior amount on my lead sheet. Let's look at the lead sheet again. There's no prior figure. So what you need to know now is, because the disclosure on your financial statements for liabilities, if it is negative, will be on liability section, the same will apply to your lead sheet. So if you go to non-current liabilities, I'm going to close that. If you go to, okay, I didn't activate it on my side. Let me quickly look for it. It's okay, we've got here loans from stakeholders, 548, loan from S. Harper. This is what we're looking for, right? So, S. Harper, 621,000. Here, I'm going to say agree prior year, just like the top. I'm going to say I've matched it to my financial statements. I'm going to do it for both, for Larry Attic as well, because if you look at Larry Attic, we've got this balance as well. Now, let's carry on with that. So, if you can't find your loan from S. Harper or Larry Attic, then it might be that it was mapped differently into your account, but I'm hoping that you're using the same Caseware working paper engagement file. So we've also confirmed with the person who's doing those section, accounts payable or stakeholders, where did they identify any loan balance for the Larry Attic Trust, so that they can tell us that they've performed it in their testing. We're also going to ask them, did Larry Attic in the testing get fully paid? They'll say yes or no, and then we'll also have some verification that, you know, during the testing they saw that it makes sense that I've moved from prior payable to absolutely nothing this year. So yeah, just quickly giving you a little bit of sense of what this is all about. So we've inserted our lead sheet references. So for Larry Attic, actually that reference here, we should also reference everything on 548 current year. That was nothing, so we've agreed that one as well. So I'm going to insert 548. Now, okay. There's also a little note that has been made. I was already inserted it here. So it says refer to section 348 for testing of loan terms, adequate reference made to loan in the related party note in the draft FS. So when we have loans receivable or payable, remember it's not just a number. If you think about when we have a loan with a bank, right? The bank will give us the loan with loan terms. And those loan terms will need to be described in the financial statements. Let's take an example. Let's say you buy a house and you get a loan with the bank. The bank will tell you that, okay, we're giving you the loan, you're going to pay us X amount on a monthly basis, plus your interest rate, which is linked to prime plus 1%. And that is actually the amount of interest that you will be processing. In the financial statements, when the company takes a loan, it's the same principle. They will have the loan terms attached to that loan, and with the related properties, they will then have as well their loan terms. But even if there is no loan terms, and even if there is no interest, it is repayable on demand, or that no security is provided, the client still need to describe that on the financial statement, and it will still need to be tested so that it is disclosed, and that you can mention that the disclosure was tested and you've tested as well the loan and the balances. What we would also actually test the terms of that loan. So that sentence here, line 56, about the loan terms, just remind us that we need to come back if ever you refer back to this exercise on the loan terms, that needs to be tested and appropriately disclosed. So remember, anytime we're dealing with disclosures, it is also about the writing and the other things in the financial statement. It's not just about figures pulling from the trial balance. Remember that little other that we've underlined in our slide. So now, before we go and go down to the rest of this, we're going to go very, very fast. Actually, I've already inserted a lot here. You can also refer on your side as well. I'm going to decide what we do just now. That column G here is per the financial statement. So we've gone in and inserted the figures. So what happened on this working paper, this is usually going to happen towards the end of your audit. Very often, from a practical perspective, we often start the audit, we have the TB, we're auditing the numbers in the TB, then later on, the clients will give us the draft financial statements, either coming from the client himself, or maybe somebody else is doing the drafting for the client. In any way, in terms of what we've done is here we've inserted right at the end of the audit, we've inserted here the different figures coming from the financial statements. Remember, always, every section, like we started since day one, needs to be tied up with the financial statements, because we usually are essentially auditing the trial balance, then we get to the financial statements later. Remember our slide, really love that slide with the circle, with the little flow, that say we need to build a bridge between the trial balance and the financial statement. That's basically that column G that explains. So what has somebody done? She has taken up the draft financial statement, they've inserted the figures, like here for plastic frames, they've inserted the trade payable amount. There's a little difference of 7 cents. This is just because of rounding, because usually the amounts in the financial statements do not include the cents. So the 7 different cents, we're happy with that. And same for our loans receivable and payable. The client has disclosed 134,000 here, and this is a a little difference, again, the rounding difference. Okay, so now I'm going to suggest that really you guys go and look through all of these different sections. I'm going to go and do one more with you, but please bear in mind you can refer and talk to us if ever you need any information. The next, in terms of the transactions, so what we've got, the team member has found that there are rent expenses paid in operating expenses section. So wrap-up properties was identified. I think I've already given you that example earlier when discussing. So there were just the transactions that were identified to an amount of 2.7 million. We've got here a tick mark that says AGL. So if you scroll down, AGL means agreed to general ledger. As per this particular legend, scroll down to cell A79, you'll get that. So what it means, it agrees to the general ledger. So the person that did this, the person who audited the operating expenses, informed the other person, myself, doing the related parties auditing, that they've identified this amount into, not that one, 2.7 million, this amount out of the general ledger. It gives to the person doing the related parties section a comfort where this was identified. And they've put here the tick mark to show us how they've got to that amount. Also, we can see the prior amount. If you go and look at your TV, if you look at your prior, I'm going to leave you do that on your side, you will see that there's only one person to whom we are paying rent expense, which is actually wrap-up manufacturing properties. And in that case, we could also have referenced it to the account and the lead sheet as well if required. The client has fully disclosed the amount correctly. We have the interest paid correctly as well. There's nothing else. Okay, so that was actually interest paid, but then for that one rent expense, that is correct. It's tying up back to the financial statements very, very nicely. Righty, so I'm going to suggest that you go and do yourself a favor and look at all the rest of these. It's very interesting. You can go and reference and see and check out your lead sheet numbers, check out the different notes that we've added for you. And we're going to move now to the other income. Going to launch now this slide. Once again, guys, if you have any questions, please feel free to use the chat box, the question box. I'm quite surprised today. I don't see any questions early. Maybe it's Friday, but usually most of our webinars were on a Friday. So please don't hesitate to insert any of your questions in the chat box. We've got everybody lined up at Caseware to assist you. So other income. Again, from a process flow perspective, there would have been some sort of an action which would result in the need to record some other income. There should be some sort of source documentation, whether it is a correspondence, whether it is an invoice, that will then filters all the way through to the financial statements. So, is not working. In that slide, let's take an example here that we see on the slide. The action taken says claim from insurance. So something happened, let's say to our hand or to our car, and that is the example that we have in other expenses. For instance, my arm broke, so I submitted a claim and the insurance came back they approved the claim and they gave me the number that they were going to pay me at. So I have the source document, the source documentation, which is the claim submission. Then we also have the approval of the claim, which then went into our maybe subledger or journal. We might have a journal entry to account for that claim. So if we didn't receive it actually in our bank account, or whether we received it in a bank account, then we'll process the correct journal entry to go through bank audit, which will then filter to the general ledger and to the trial balance, which then filters through to the financial statements. In terms of the insurance claim, in terms of the accounting framework, it tells us that in some cases, what we do with compensation received, for example, for loss in terms of PPE, it says record the claim in profit or loss. And if you go and investigate further, if anyone has done that in the room around a claim from insurance, it would actually be recorded in other income. As you saw, have you seen in the operating expenses, where not operating expenses, but the framework would say you go to other income. Don't set it up, set it off in profit or loss. It needs to filter through the financial statement as other income. So when you audit it, you will ensure that what is in the financial statement is in accordance with the accounting framework. What I'm trying to say, let me move to that one. What I'm trying to tell you once again is your point of reference would again be your accounting framework. If you're not sure about how to disclose and how to, understand the definition of a transaction, go back to the accounting framework. Right. Okay, I'm just quickly looking at what we need to cover here. Just moving to the next slide, I think we've got here some considerations. Give me 1 second. Coming to that just now, guys, I'm just having an issue with my cursor. Right, so some considerations here on that slide. The nature of the item determines the classification. So the definition of the income encompasses both revenue and gains. So again, refer to your framework. The definition 2.5a and 2.25a and b gives us the definition of income, whether it encompasses both revenue and gains. Classification is often not considered, but is often the problem. The proper classification of, for example, a claim, or it can be a refund, a government grant maybe. Is there documentation that tells us about a particular grant, or is there a supporting documentation that will tell us about how the recording happened? So other income is quite a wide range of things. Again, these things we could agree this, you must be able to agree this. Remember that you're not always going to test other income. It really depends on the risk which has been raised, or if it is material. And what I would say is, if other income is material, please make sure that you do consider whether classification is correct, especially if it's material year on year on year. If it's 1 year that is material because it's, you know, once off insurance proceed, then it can make perfect sense. One thing happened one time. But if it is consistently material, then perhaps we should look at it at what this is currently. If it is a consistent refund, whether it does actually make sense, whether the classification is correct. So the testing principle, we don't have actually an exercise on the testing principles, but the testing principles is the same as we have applied throughout all these sessions. First of all, I'm sure that by now you must, you know, be confident with that. You will prepare a working paper. It would usually be in the form of an Excel from your firm, making sure that you have all the header sections that is completed and explains what you are doing. You would also reference to the different steps from your audit work program. And of course, you will perform the steps from your work program. You should also be documenting on what you're doing and how you're doing it. If we quickly go to the document manager, so quickly showing you that, you go to the document manager, and if we go to down to the operating income, so I'm quickly going to look for your operating, not sure I've got this here. No, that's operating expenses. Okay, I don't have an example here, but what you would have on your side will be operating income and operating gains, where you're going to see your profit or loss on sale of assets. And by the way, guys, how do you find a particular lead sheet if you're not sure where an account number has been mapped? I can easily go to my trial balance final TB document 00.30. If we look for, let's say, sundry income insurance recoveries, here you go. That is on lead sheet 700.730. So if I go back on document manager, I think I've not inserted 730, but let me show you. Let's take that as a lesson. Let me quickly show you how to bring it back. I'm going back on the FSA. Remember, from Audit International perspective, if you can't find, or maybe there was an optimizer that ran that removed the operating income lead sheet, you can bring it back, because that will be done at planning stage by your manager. They're going to bring back the operating income, for example, by clicking on the materiality assessment, scroll to the right, press on insert working paper references, press on yes. This is the bringing back of a particular financial statement area. We're going to bring it back because we're considering it as material here. And back on my lead sheet, on my document manager, it should be there. Operating income, the document 730. So here we go. We've got our sundry income, insurance, recoveries of 31,626. So here, in that case study, the operating gains and losses might be, you know, things like foreign exchange gains or even profit or loss on sale. But here, what we're looking at would be, where do you find your sundry income, your other recoveries? Once again, it depends on the mapping. It depends on how the mapping has been done. So what you need to do when you look at this item, how do you test it? What is that item? Make sure that you refer back to your audit work program. We don't have time to go back to the audit work program, but yeah, usually you would go to your working paper, your work program, make sure to have the appropriate tick marks, the appropriate linkages between the two, so that you can perform the right tests. Guys, that was a very short session, but I hope that we have blended with you some principles. I'm going to launch now the polls. Please feel free to insert your comments. Not the poll, sorry, it's not the poll. It is the feedback sheet. I'm going to insert that in the chat box. Please don't leave the session before that. Insert your feedback. We're looking forward to read all of your feedback. And whilst you're doing that, I'm going to project my screen once again and just informing you what's next. So today we're going to close out the session on other income. On the 23rd of May, we're having a session of financial statements, the differences between IFRS and the IFRS for SME standard. We're also going into the detail of retained income and OCI. On the 24th of May, we will have a session on substantive sampling testing and control testing sampling sheet. 6th of June is going to be the well-awaited for cash flow and XBRL. And on the 20th of June, last session for financial statements, which is accounting policies, roll forward and update. Please do complete, whilst I'm talking, the feedback sheet form. And in a few seconds, I'm going to also share a little surprise. Please do stay online, take a few seconds to go and fill in the feedback sheet. Guys, please do stay online with us. We have a little surprise to share with you just now. Fill in the feedback sheet. It's in the chat box. You can access it in the question or chat box. I think it's the chat box, right? So Chintani, thank you for your question. There's a question, I'm loving your questions now. There's a question around how to enable Caseware Cloud. So if your firm has Caseware Cloud, then what you're going to do is ask them get their URL. So there's a unique URL. Then you're going to go to file options. You close all Caseware, working paper, all engagements. Any engagement should be closed. Any case you should be closed. Then you go to file options, Caseware Cloud. There is the option to integrate with Caseware Cloud. You select this, you insert your URL there, and then select active, okay, and you'll be connected. Just make sure that you get the URL from your from your phone, the link. Okay, guys, we've got 3 more minutes to go, or less than 3 more minutes to go. So the surprise is I invite you, the first one who is going to connect to our LinkedIn group, Get Ahead Audit Intake 2024, and comment on something that struck you. Is there a particular subject that you really loved in Audit International? Insert a comment, insert a post on the group. Let me show you the group once again. It's Get Ahead Audit International Intake. You can type in the search bar, and we promise you to get a very nice prize. The prize will be, look at Anton, for example. He commented a very simple line saying what did he enjoy, and he received a 2-hour free session with ourselves, with myself and Ninka, to ask any questions. Remember, it's an opportunity. If there is anything that you would like to, if you like help or guidance, remember, we want to get you ahead to the next stage in your career. Maybe you want to discuss how to improve something, how to help you on your engagement file. It's a free consulting for 2 hours. It's an amazing price. We've got even Jose or Rose, who also commented about something that you've learned. We also have Shelter. I saw your question. You won as well. You're taking a voucher. So guys, we also make you visible on our community on LinkedIn. I will comment, Caseware will comment, Ninka, all those stakeholders at Caseware Africa will be able to see your posts. So you also want to be visible as part of the Getting Ahead. So please feel free to comment and stand a chance to win. It's an amazing opportunity for you to win. And it's already 2. I can't believe it. On my side in Mauritius, it's 2 p.m. On your side might be noon. I wish you an excellent weekend. Looking forward to the next session. Please feel free to connect with us if you have any questions. And looking forward for the winner. See you guys soon.